everyone, this is Jeremy Schachter with Fairway Independent Mortgage. When you get a mortgage, you sign something called a deed of trust. Whether it's a refinance or a purchase, this deed of trust gets recorded with the county, Maricopa County if you live in the Phoenix metro area. Well, guess what? That's a public record and people buy lists off of that. So as soon as you get a house or refinance a house, you get all this junk mail. One of the things that comes out that you usually get is something called mortgage insurance or protect your mortgage. So I want to talk to someone who knows about this, the ins and outs. His name is Michael Marcinko with Farm Bureau Financial Services, and I'll have him come up, talk about what that means, how to protect yourself, and the ins and outs of it. Hello, Michael.
Morning, buddy.
How are you?
Fantastic. How are you?
Thanks so much for, you don't need to put the seatbelt on. We're just going to park right here
cool.
and then talk. So I was telling everyone that when you buy a house or refinance a house, it gets recorded with the county, and all of a sudden you get all this junk mail.
Tons.
From carpet cleaners to alarm companies to refinancing your mortgage as soon as you bought the house to something called like a mortgage insurance protection policy. Correct. And I get this question a lot because I'm like, what is it and what does it mean? So if you can give me the 2-second summarized version of it.
Literally one thing.
Okay.
Life insurance.
So it's life insurance.
It's a term insurance policy.
So basically they put a nice fancy word saying, oh, protect your family by paying off your mortgage if something happens to you, but it's strictly life insurance.
Correct.
Okay.
Yeah, so it's, hey, we've got this life insurance policy. We saw that your mortgage was $250,000.
Right.
Well, $250,000 policy for mortgage protection is $40 a month or whatever it is.
Gotcha.
Literally life insurance.
So it's life insurance. Because on the deed of trust, it actually shows your loan amount. So basically, they take your name, your loan amount that you're doing, and then they try to turn it into protecting your family with a mortgage insurance policy, but it's a life insurance policy.
Just life insurance policy.
So can you give us just quickly summary of what different policies you can get and what it means?
Okay, so there's two basic types of life insurance.
Okay.
There's term, which means time.
Okay.
So you're buying a set amount of life insurance for a set amount of time.
Okay.
10 years, 15 years, 20 years, 30 years.
Okay.
And then there's permanent. So like the old whole life policy, that Gerber policy.
Sure.
You can get those.
Okay.
There's also universal life. These are permanent policies that last from the day you get them to the day you pass away.
Okay.
So it's a little bit different from a term.
So I'm 42 years old.
42.
So
are you really?
I know.
You look so much younger than that.
I know. Good genes. Anyway, if I'm 42 years old and I have a mortgage they just took out, say, for $250,000, what roughly would you recommend on a policy for someone that's healthy and for my situation?
More than $250,000.
More than $250,000.
Yeah. Why would you just want to pay off why would you just want to pay the mortgage company that policy? So you want to look at things like salary replacement.
Okay.
For your spouse.
Right.
For your surviving family or spouse.
Okay.
You might have more debt than just that mortgage.
Okay.
You want to take care of that too. So you want to do a personal needs assessment.
Okay.
And find out what your number is.
Okay.
So people have numbers that range from, I've only got $50,000 of debt. Well, congratulations. That's amazing, first of all.
Right.
Or in my case, I've got 2 kids. I got to pay for college.
Sure.
I've got $1 million of term life policy just on myself on top of everything else I have for life insurance.
Gotcha.
Something happens to me, I need to take care of that financial burden my family's going to face.
Gotcha. Okay. Perfect. And you can get a life insurance policy if you're 99 years old, and you can get a life insurance policy if
Not
you're
99,
okay,
but close to it. The older you get, the more expensive it is.
Okay, gotcha.
The older you are, the more statistically closer you are to passing away.
Gotcha.
So rates are super cheap when you're young.
Okay.
You want to also get in before your health starts to fade too.
Gotcha.
So if you lock in at 42 and you're in great shape, well, if something happens to you health-wise, and you can't apply for life insurance in 5 years because you've got something that prevents you from it, you're locked in. You've got your life insurance.
Gotcha.
Yeah.
So it doesn't matter what happens down the line.
As long as you have it in, you're good to go.
Okay. Perfect.
Yeah.
Well, thank you, Michael.
You're very welcome, buddy.
I appreciate you explaining that. Thanks so much, everyone. Take care.
Take care. Bye.
Bye.